Thanks for tuning in to India Market Close, and quite a turnaround, you have to admit. Yesterday at the same time, the markets were sulking. Today, they are not exactly recovered all of the lost ground, but have done really well. Remember, we didn't start off all that well, especially for the broader end of the spectrum. We'll get the Bank Nifty, which was down 0.5% at the beginning of the day. It's still down, but the mid caps and the small caps in particular, which had started off with deep gusts, are up 1.5%. And the small caps as well will come up on your screen next, about 3% higher. Now, the question is, will this sustain or will this crack? Who knows? I mean, depends on who you hear. But let's just report for what it is right now. And get the heat map up on the screen and then the market breadth. But first, the heat map. Fair degree of green. In fact, more green than red. And not too many losers. Yes, a select band of banks and financials are down in the session today, as you saw in the Bank Nifty. So the likes of IndusInd, Axis, there is State Bank of India, which is down about 0.77% here. So that, and Bajaj Finance. So that set of stocks are doing a slight bit of wobble. But look at, on the flip side, everything which was down yesterday, Adani Twins, there is Hindalco, there is Larsen and Toubro, they are up, and IT is leading the charge here. So therefore, there's a bit of a support from information technology as well, which is thwarting the kind of losses that banks are giving in the session today. So good going there. The market breadth, as Tamanna comes in, let's just get the advanced decline ratio here, and has looked solid except for the start. This is, Tamanna, just a mirror image. I mean, independent of the numbers, but just a mirror image of what it was yesterday when we started off well and then had a terrible day. Today it's quite the reverse.
You know what is, I think, impressive is the strength of and the speed of the recovery. Because 24 hours ago, all of our speakers were saying get ready for longer term pain. That's not quite happened, and especially in the broader end of the market. Now, what has really been driving this recovery? I'm going to start with railway stocks because they really have turned around. Look at RailTel and IRFC, RVNL, all of them doing very, very well. You know, you have to also understand, though, when you're looking at some of these counters, they have a very low float. So some limited buyers could also see this push up, but that's always been the case, to be fair. So you're seeing rail stocks doing very well today. In the PSU pack, I just want to talk about SJVN, because SJVN was one of the top losers yesterday. And this is kind of a turnaround story you're seeing. I mean, if we have a chance, let's pull up Pesa low as well. But SJVN about 17.5, 18% up. Yes, there is a news, sort of trigger that you can have, because the renewable arm has received a letter of intent from the Gujarat Urja Vikas Nigam Limited. But all right, I mean, the fact is that even a Pesa low is 10% up. So whatever was falling the worst yesterday has seen a decent recovery. Praveg back in the news after a while. The tent maker has got orders for resorts in 2 islands in Lakshadweep. That's Bangaram and Chinakara. I hope I'm getting the name right. But Praveg, they're, back. Swan Energy, another one of those counters which has seen a rebound kind of a move along with Pesa low, even Swan about 10% up. So it's actually the opposite of what we have been seeing yesterday, Niraj. And if you look at it, it's a whole story of not just buy on dips, but very strongly going out and picking up opportunities which were available yesterday in the market.
Yeah, for people who managed to do that, certainly it's paying off for now. The question is, can it last? And let's pose that question to our guest today. Rajesh Palveya, he's SVP Technical and Derivatives Research at Axis Securities, joins us to talk about the derivative and the technical picture, and on the fundamentals, G. Chokalingam. Gentlemen, both of you, thanks for joining in. Rajesh, let's start. Does this move, particularly at the broader end, surprise you, the pace at which it's bounced back?
Good afternoon, Niraj. Good afternoon, everyone. So, yes, it's a surprise for everyone in the market. The kind of texture which we were witness in previous day and today, it's a very different texture for the market. But the comfort is, on the mid cap and small cap. That is, again, getting back most of the traders and investor on the market. As we look at the broader market, recovery is taking place. We have seen a very significant supply pressure in last couple of trading session for most of the mid cap, small cap space. That is again, bouncing back. So that's the first sign of some comfort on the market. If this continues further, yes, possibly we can see furthermore, buying action in coming trading sessions also. Moving to the index, still today we have Nifty expiry for weekly options expiry. So for Nifty, 22,200 is the major call writer, zone for today's session. So until we are not able to take out this 22,200, Nifty is likely to remain in range for some more time. On the downside, 22,000 put writers have attracted again, more selling in today's session. So that seems to be act as a good support area in the decline. So 22,000 to 22,200 is the possible range for next one or two trading session. Once we able to take out 22,200, then some short covering action could lead Nifty to further higher towards 22,350. That's again, major supply zone based on the derivative front. On the Bank Nifty, still Bank Nifty is struggling to recover. 47,000 is the major supply zone as of now based on the call concentration area on the Bank Nifty spot. So until Bank Nifty not manage to cross and hold above 47,000 level, that's the critical point as of now for the market. On the downside, 46,500 is the major support area. So I think index may remain in range for some couple of trading session, and possibly we may see these kind of action to continue in mid cap and small cap, because most of the mid cap small cap was in oversold trajectory on the near term setup. So where the recovery is taking place, and most of the mid cap small cap stocks have corrected to their 50-day moving average. That's the important support area for near term trend, and most of the stocks are recovering from those levels. So that is giving us confidence that yes, as they are holding 50-day moving average, so a trend is likely to intact on the bullish side for broader market also.
Rajesh, good afternoon. Tamanna here, and we'll go stock specific, especially on some of the big movers today. But before we come to that, I just want to get your take on the rail pack and the kind of zoom up they've seen. And we qualified by saying that these are low float kind of stocks. Now, if someone felt stuck in them 24 hours ago but held on, should they continue to do that is the question. Where would you say the next direction is for some of these counters?
So if we ignore the previous day fall, the most of the railway counter were already in corrective mode, and most of the stocks have already corrected in last couple of weeks. And again, the today's recovery is almost from there, almost 100-day moving average is defended by most of the stocks. The stock like IRFC, very strong momentum from its 100-day moving average, and the stock managed to hold those support area. So I think that stock is looking again, promising, as long-term structure is still intact for most of the railway counter. Near-term pressure was there, but again, as most of the stocks are able to hold their important support area, and recovery is clearly there in throughout the pack. So we believe that, yes, this momentum can continue further. So IRFC, RVNL, IRCON, these three stocks are looking promising, and we believe that, this recovery can continue further, and possible another 5 to 10% kind of up move we can see in the continuation of this pullback. So IRFC, one can hold their long position, or even at the current market price also they can buy with stop loss of 132. RVNL, the stop loss is now at 232. Upside target we can see towards 255 to 260. And IRCON, that stock is also showing good traction. So here we can see a level of 220 to 225. Keep stop loss of 202.
Okay. Well, must say PSUs, railways, defense, I think that bucket which was under pressure has come up very, very strongly. Good going there. We're not quite seeing the same for power, by the way. So I must say, from amongst stocks that have gotten beaten down, and media stocks like Network 18, TV 18, Z, and as well as some of the power names like Inox, Twin, Suzlon, etc., I think the bounce back there is a bit more tentative relative to some of the others. Mr. Chokalingam, welcome to the show. And this PSU bounce back, you reckon a dead cat bounce, because valuations would still be expensive. Would you sell into these rallies if you had the stocks?
Yeah, certainly. I am extremely bullish on medium to long term, but in the short term, I still remain little nervous. I would say that if any small and mid cap stock, including PSU stock, if it is trading at, say, 40 PE, ensure that at least the profit is growing at 20% annualized. And to that extent, 50%, I can even compromise on, the well-established, the valuation theories. So that would be my criterion, that if you are giving 60 PE, see that at least the profit grows by 30%. If 40 PE, at least by 20%. So adapt this criterion and follow across all small and mid cap. And this is the time to be extremely cautious, because I don't have any fear on the market from economy or politics, because economic story is very strong and political stability is very much visible. And also structural stories are very strong for the market, also in terms of inflow of investors. But for me, the worry comes only within the market, particularly two segments of the market. One, there are many small and mid-cap stocks where promoter holding is zero or near zero, and no business for last 5 years, but market cap is 1,000, 2,000 crore. So these kind of stocks, one segment. And second segment, as I said, if profit is growing at 20%, some of the companies are enjoying even 40, 60, 70 PE. So these are the only two segments which give me worry. So therefore, I am afraid that kind of nervousness we saw yesterday might get repeated in the short term. So therefore, apply this criterion of PE versus profit growth, and use this opportunity to restructure one's portfolio.
Okay. Point well taken. Mr. Chokalingam, the news flow around metals has been a bit lackluster, but there is a bit of a bounce after the correction move in the last few days. Any of the ferrous or non-ferrous plays that you are constructive on, or are you avoiding them?
We had a coverage, we have closed and we gave sell call, because I am not confident of global growth picking up except in US, and which is very much relevant for metal space. And we all know what is the kind of status of European growth. So even China is struggling for 5% growth. So all these are negative for metal space. So I would give a sell call on metal sector.
Okay, gentlemen, stay on. So much more to talk about. We'll take a very quick break. Come back, talk about some of the key movers, talk about the stock of the day, talk about some of the volume buzzers, all of that coming up on a very exciting last 45 minutes of trade. Stay tuned.
All right, so this is recovery mode. Recovery mode in the markets. A couple of things have happened all through the afternoon, which may have contributed to some of this. Take a look at some of the top gainers on the Nifty as well. The Adani pack doing well this afternoon across all group companies. Standard disclaimers there. The channel you're watching this on is owned by Adani Media Group, but not just Adani Entertainment there. Look at ports, look at energy, look at Total. All of them, look at green, all of them up with a significant, jump up compared to what happened yesterday. But one more stock, which is definitely got the title of stock of the day for us, is Shriram Pistons. It's jumped about 9%. Last we checked, let's look at the current rate or where it is. Yeah, 13, nearly 14% in trade. MK has initiated a coverage with a buy on Shriram Pistons. That could be one of the trigger, but to be honest, it's a rebound across this category as well. Puneet joins us with more. Yes, Puneet.
Hi, sorry. So we are talking on Nuvama on passive flows basically, and on the passive flow action on March 15th, there are multiple index rejigs as of on National Stock Exchange, FTSE being one of the most significant ones. Now they are expecting 1.7 billion inflows on FTSE tomorrow, and major inflows are expected in the BFSI names, and like HDFC, ICICI, Kotak, as well as...
That's very well. Puneet, I'll come back to you. There seems to be some crossed wires there. But yeah, we were talking about Shriram Pistons, and I just want to take that further, Niraj, and look at what's happening across the infra construction phase.
Or auto ancillaries, right?
Which is construction, IRB infra, auto anc as well. I mean, obviously, all of your economy play back in action. But,
yeah.
All of your infra plays, crane maker, act construction, another hot stock of the day, Jain irrigation, all of this back in move.
And this one in particular, because, Tamanna, at 1,000 odd rupees is when one ace investor, I think Abacus, bought a very large chunk, 7.5% of Shriram Pistons. Back then, it used to trade at maybe 10 times or 9 times or thereabouts. Since then, it's gone up to maybe 1,600 or thereabouts. And currently, as MK says, that with the 40 to 45% share in core products, which is pistons, piston rings and walls, and a slow emergence, aside of the fact that they are emerging as the last man standing for engine parts, there is also this story of how Shriram Pistons will slowly and steadily move to the electrification as well. So combined with both of these aspects, as well as very strong valuations, there is clearly a bounce that we're seeing in Shriram Pistons in the session today. Now, Mr. Chokalingam, have you looked at this story? Because it's got some marquee investors now. And for a company which has not made very strong headways into EVs, the valuation comfort is probably giving people a chance or a comfort to buy into this one.
Yeah, it's a part of good management, excellent management. Only problem is a part of the business is still dependent on fuel-based engines. But those who are lucky holding it can continue to hold. I would be comfortable, to pick up this kind of stock when there is some meaningful correction.
Got it. So, do you have a firm view here? I mean, I know you like the management. Do you have a firm view on whether you would want to buy into something which is not as expensive like Shriram Pistons?
Yeah, but very difficult to find great ideas in this market, to be honest. Not in automobile, we have a few stocks in other sectors.
And we will talk about that, but since we've classified Shriram Pistons as a stock of the day, just want to take that out of the way. Today, Rajesh, the volumes on Shriram also higher than what they usually are, unless I'm wrong. My question is, for a stock that is now consistently seen buying at every dip, is this a good one from a trade/investment candidate? What maybe the longer term charts tell you a story.
So definitely, if I look at the monthly structure of stock managed to give breakout on the monthly chart of its rounding bottom formation. And again, in last couple of weeks, we have seen some bit of a corrective move. Stock almost took support from its 100-day moving average and very strong pullback action in today's session. So looking at this price action, we believe that, if stocks manages to cross above 1665, 1670 kind of zone on a closing basis, then this follow-up buying action we can see towards 1800, even it may surpass to its all-time high trajectory also in going forward. But at this moment, 1670 needs to watch closely. If it crosses those level, yes, possible rally can continue towards 1800 kind of zone also in short-term basis. So those who have already bought the stock can hold the position and can trail their now stop loss towards 1590 and hold the position for upside target of 1750 to 1800.
Just a quick look at some of your small cap gainers. An interesting place there. BLS International 19% up. SJVN we talked about, but even in Ircon, Electra, Green. In the BFSI space, you're seeing a stark contrast. And while an RBL is doing badly, a central bank is having a great day, about 11.5% up. I'm seeing some movement in, a few of your tourism spaces as well. We spoke about Praveg earlier, but look at Easy Trip as well, 10.5% up today. So some interesting themes making a comeback in trade. A lot of other buzzing stocks in trade today as well. And Anushi is joining us with more details on that. Yes, Anushi.
Right, Tamanna. So 5 stocks over here. So first on the list is Century Plyboards, about 8 times volumes if you had to compare it with the 30-day average, and about 4% of intraday gain over here. Now, if you had to look at the analyst recommendations over here, a mixed set of reviews, about 17 having a buy rating, 8 have a hold rating, and 3 have a sell rating, while the upside potential is seen about 19%. Next on the list is Sterling and Wilson Renewable, which is facing some pressure in trade today, about 5% of an intraday low, while this is on the back of a large trade today wherein which happened at a price of about 490 per share. This is also supported by some latest news flow regarding media articles suggesting promoter stake sale, wherein Shapurji Palanji may sell some of its stake in the company over here, but the company did come up with a report clarifying that this is incorrect, so a focus remains on that going forward. Third on the list is Moltec Packaging over here, about 6.9, almost 7 times its volumes over here. Now, again, over the company, if you have to look at quite a decent trajectory for the company, if you have to look at the last Q3 numbers, a mixed set of numbers over here, about the sales volume was up about 14%, their first double-digit growth ever. The margins and the net profit faced some pressure, with the net profit being down about 13%. Fourth on the list is BLS International, just a little shy away from the 20% upper circuit mark over here. Volumes about 5 times its 30-day average. If you have to look at the overall one-year return, also about 120% of gains in this period itself, while the 1 month did see some negative pressure of about 5%. Last on the list is Rights Limited. So the stock has been seeing an intraday high of about 14.4%. If you had to compare that with yesterday, so quite a comeback that the stock has made. Also, an important point over here is in the recent conversation where the company had mentioned about its aim to achieve a 1 order a day gain milestone, which it achieved in Q3 and is believed to be continue this trajectory going in Q4 and next year onwards as well. So these are some of the key stocks which are buzzing in trade today.
All right, thank you for that, Anushi. Rajesh, any of these you're tracking? BLS, Rights, for example, a lot of names over there on that list?
I think most of the stocks are behaving in the same manner. Pullback action is there. BLS, if we talk about BLS, very strong buying action in today's session. Almost stock took support from its 200-day moving average, and now stock managed to cross last 3 days fall. So looking at the bounce in BLS, we believe that if stocks holds about 335, 336 kind of zone, then possible pullback can continue towards 360 to 365 on the higher side. And Rights, again, stock is showing a good buying interest. Stock almost formed a low around 600 kind of level. In the previous session also, stock took support around those levels. So if it's now continues to hold above 615, 620 zone, then possible pullback can be seen towards 685, 690. That's the next resistance area on this stock. So BLS is looking more promising. I think that stock can continue this upward momentum. Century Ply is also now trying to penetrate its falling channel sloping trend line. So that needs to be watched. If stocks crosses above 700, then yes, some more buying interest we can see, and then possible target we can see towards 740. So after a corrective move, very strong pullback in Century Ply also. So looking at overall structure, we believe that if stocks crosses 700, then one can look to buy for near-term trading perspective for upside target of 740.
Okay, well, on that note, let's slip into a very quick break. On the other side, we get you some top BTST ideas, a key brokerage note, the whole derivative picture, and some key market voices that have spoken to NDTV Profit today.
22,140 on the Nifty. The bank Nifty really is the only one sulking today. Broader markets have recovered sharply. Agam is with us. Nifty expiry today, Agam. And one way or the other, you've seen a great pullback, isn't it?
We have seen a great pullback, it did take at least some by surprise, considering there was an expectation of weakness, but that hasn't come to be. And in fact, the Nifty has climbed above the mark of 22,000, defending there. And with that, it also becomes a little bit of a strengthened support, at least in the near term, the 22,000 mark. Currently, of course, well above that, and we are looking at longs once again resuming after unwinding that we saw earlier on in the session. And when it comes to the bank Nifty, again, a little bit of weakness coming there, 0.5% cut there. But and not too much to speak for the open interest either. But today was, of course, about the benchmarks. Broader markets, of course, did perform very well, and that perhaps has had some sort of an impact on the benchmarks too. But it was, of course, the weekly options expiry. So let's pick up and see what's really happened with the options market. So naturally, as the Nifty moves higher, we tend to see a lot more writing in terms of puts, and it does seem like we're going to close above the mark of 22,100. Where does that leave us in terms of overall open interest? Well, naturally, considering we have seen the most amount of traction today around the 22,100 and 22,200 calls and puts, these two levels, these two calls and puts have been most active as well. Of course, we will move into a new expiry tomorrow, and that will also perhaps set us up with what we can expect going forward. But as I mentioned earlier, 22,000 has strengthened just a tad bit in terms of a support, notwithstanding the kind of volatility that we can in fact expect on the back of results of the stress test. But as far as stocks are concerned, we are looking at shorts in Shriram Finance and longs for MCX, Dr. Lal Pathlabs and MGL. NMDC also under just a tad bit of pressure, so some amount of shorts there. And in terms of stocks which are seeing unwinding, short covering for Ultratech. Adani Enterprises is looking at an up move of 6% right now. HUL and PI Industries also looking at, short covering. And of course, ITC just down by as much as 0.5%. So perhaps some amount of longs and winding coming through. All in all, a good market and certainly a positive end to this weekly expiry for the Nifty.
Yeah, so not bad at all. Just looking at some of the ones languishing at the bottom of the barrel, at least on the small cap index, Tata Investment, another day of pain. IFL Finance, once again under pressure, RBL Bank. So these are some of the names which are seeing, a bit of pain over there. Rajesh, I just wanted to get your take on the BFSI space. And would you look at any of the private players right now?
I think that BFSI as well as this whole pack is still struggling to recover. Some recovery is taking place, but still, if we analyze the broader picture, we believe that it may remain under pressure for some more time. Most of the BFSI stocks are showing supply pressure for minor pullback, which we are seeing in today's session. So banking is also not participating in this rally. So most of the large cap banks are also, showing some bit of profit taking still for pullback, which we have seen in the first part of this trading day. So I think other segments are doing good. From that space, insurance is one space. One can look at those space. Most of the insurance stocks are showing good traction in terms of buying. So I think one can look to buy ICICI Pru, HDFC Life. These stocks are looking promising, but rather other BFSI stocks are still, showing some pressure. So I think another 1 or 2 trading session needs to watch for this space. And then if, index Nifty, as we talked about that, 22,200 breakout happens, then I think some catch up really we can see in this BFSI space going forward.
Okay. Point well taken. BFSI is one, Pharma is other. Yesterday had a bit of a dull day, but today some of the stocks are up. IPCA in particular is buzzing after HSBC upgraded the rating of IPCA. Varsha joins in to tell us what is the key content of that note. Varsha.
Hi Niraj. So if you see, IPCA has seen an intraday high of almost 7.3% in trade today. Now this is on the back of HSBC upgrading IPCA Labs to buy with target price of 1,335 from 1,125 earlier. Now they expect IPCA to see margin expansion which is aided by growth in focus markets and easing cost pressures. Also, margins are expected to improve from 16% to 21%, and they're expecting a PAT CAGR of almost 50% from FY24 to 26. Also, start of the US supplies will be a key catalyst as IPCA is set to enter US market after almost a decade, and slowdown in the India market and adverse development in export market is a key risk that they are eyeing into.
Thanks for that, Varsha. So IPCA is definitely buzzing. Rajesh, any views on IPCA?
So we are seeing some traction in pharma space, and IPCA is one stock where if we analyze the near-term, short-term structure, stock is very well holding its previous breakout, and looking at the short to medium-term structure, stock is holding the ground at 1150. That's the important level. So if it's hold above 1150 on weekly closing basis, then trend is likely to remain on the bullish side, and possible once stock crosses above 1200, 1220 kind of zone, then I think it may resume its uptrend trajectory, and possible target we can see going forward towards 1300 plus kind of level also. So overall structure is bullish. 1150 should be your stop loss to hold your long position in IPCA.
Chokha, are you tracking IPCA, and anything that you like in the pharma space that you would touch right now?
I used to track it. Yes, another 5% to 10% is very much possible. And one should hold on to this kind of defensive stock. But otherwise, we have a firm recommendation in the small cap pharma. If you want, I can reveal the name.
Yeah, please do.
Yeah. Indoco Remedies. This, I believe, a firm winner. It's a domestic formulation business is valued only at 3 times enterprise value to sales. But if you look at other domestic formulation companies, small companies like JB Chemical, Ares Pharma, they trade at 6 to 7 times. And it has got a good balance sheet also, good management. So I firmly believe that it is a very quite safe and wealth-creating stock, this Indoco Remedies. Okay,
interesting. Indoco Remedies, JB Chem, some of the names on Chokha's list. Another big factor to look at. And we've been talking since morning, Niraj, about the importance of March 15th. Tomorrow's a big day for so many reasons, and of course, electoral bond details will be out, the stress test. I'm going to ask Chokha about it as well. Stress test for mutual funds. But one more thing which we're going to see is the rejig of the FTSE index. That comes into effect, and that's going to trigger passive inflows of $1.7 billion into a lot of BFSI names. Is that going to be a big factor as well, don't you think?
Yeah, very like it. HDFC Bank clearly stands out there, and it could be a large one for HDFC Bank in particular, which has kind of missed out on FI flows, but could be an interesting one. HDFC, ICICI, Kotak Mahindra Bank, and Sundaram Finance, amongst others, are principal beneficiaries of this. But yep, could certainly be a small trigger for tomorrow morning. Usually these things get discounted in advance. I don't know if that has happened as yet or not, because Bank Nifty is sulking today for sure. So interesting to see if tomorrow is the day.
So we talked about 3 things that are important. One is, of course, the FTSE rejig, the FTSE index rejig, which will get some passive inflows in. The other big one is the stress test. And Chokha, I just want your view. So just for context, the stress test is something that SEBI is mandating. They want mutual funds to be ready if there are redemptions of a certain amount, 15%, 30%, 50%. Mutual fund companies have to come out and disclose how much time they would need to provide those funds to investors, and hence the stress test. Now, the stress test has become quite stressful in advance. Do you see some of those concerns now receding after the kind of close we're headed for? That question first for Chokha.
I don't think that concern has receded with this correction, because I still see a lot of small caps where mutual funds are holding, where liquidity is not that great, even the valuation comfort is not there. So obviously, I would expect the mutual funds to include not only the liquidity, even the fundamental part of it, valuation part of it in the stress test, because that's what will help investors to hold on, even if counters are not liquid. But if valuation comfort is there, they can stay strong and there will not any panic dumping in the market. So obviously, I would expect AMCs to look at both, and therefore I expect that beyond the BSE 500, the most small cap should have some fear or some panic situation kind, because they account for almost nearly 40 lakh crore market cap. If you exclude the BSE 500 market cap from the whole market cap, the residual one is outside BSE 500, and I believe that is where some possibly some stress can come for the investors. So therefore, the day like this is a very good opportunity to restructure one's portfolio.
By the way, we're talking about pharma. So okay, stress test, and from stress test to a news flash. Biocon Biologics has entered into a long-term commercial collaboration with Eris Life Sciences to expand patient access of its portfolio of metabolics, oncology and critical care products in India. The total transaction value is of 1242 crores, which is about 3.4 times revenues and 18x of EBITDA. A 10-year supply agreement as well with Eris. So interesting. Biocon has taken a bit of a spike in the session today. So watch out for this one. Just moving higher as we speak is Biocon. And wonder if Eris has some moves too. Eris, just a little bit of a perk up for that one too. Just wondering, firstly, is there a trade here? I mean, at all, Rajesh, on Biocon in particular, which has shown the bigger move?
So Niraj, yes, spike is there in Biocon, and the kind of buying action which we are seeing in Biocon throughout the day, that clearly shows that now if its stocks manages to close about 274, that's the trigger for the fresh buying for the stock, as stock then managed to form a bullish engulf kind of formation on a daily chart. So 274, if it closes about 274, yes, it's a BTST kind of trade also. Then follow-up buying action would be triggered for the stock, and then we can see next target towards 285 to 290 for the stock in near-term basis. So at this moment, I think wait for another 5-10 minutes. If it's crosses 274, then yes, one can carry the position for BTST also.
Okay. So if it crosses 274 viewers, then that's the conditional thing that Rajesh has on Biocon. But good move today for sure. Good move. By the way, speaking of good moves, Tamanna, you have to look at the Adani Group in the session today. And as Tamanna said, standard disclosures that you're watching NDTV Profit, and NDTV is owned by the Adani Group. But just look at that across the board. The stocks have bounced back very, very smartly. We just had a few minutes back, we had an announcement on Adani Green that they have commercialized one more portfolio. Yesterday or day before, it came in that at the Khawda project, they've commercialized another 1100 megawatts, if I'm not wrong. So there's some smart moves there.
Yeah.
That we're seeing in a bunch of these stocks.
It's an interesting, in terms of the movement of these stocks and this clutch of stocks, it's interesting to track where they have come from the worst period of the Hindenburg report and the fallout of that. And the run-up has been quite significant. We're going to ask the views of our experts on this. But before that, we heard from Adani Group Chairman Gautam Adani, who spoke on the Hindenburg report, which triggered a massive rout in Adani stocks just over a year ago. Listen in to what he said.
Last year, the 24th January, we were subject to a massive attack by a US short seller. The objective was not just to destabilize us, but also to politically defame India's governance practices. Despite the efforts to shake our foundations, we stood firm, not just safeguarding our reputations, but also ensuring we remained focused on our operations. While there were several learnings, this episode also gave us a confidence in our own resilience. Our recovery highlights the essence of a bouncing back, stronger, symbolizing the spirit of a rising after every fall.
Well, the stocks have definitely risen after every fall, and the latest one was yesterday. Interesting notes coming out on the sale in the last 2 days that we've seen in the broader markets. We're now today seeing a sharp recovery, accompanied by positive outlook from brokerages as well. Mahima has got together two of those notes. Mahima, what are the highlights?
Right, Tamanna. So first I'll start with Jefferies. They're saying that the small and mid-cap correction, it's just a correction and not a meltdown. They're saying that more corrections are possible considering the recent surge in volumes and flows for small and mid-caps. Now, they're also saying that they believe a healthy correction has already been taken place of around 12 to 17% from the peak. However, they believe that the strengthening capex cycle that the small and mid-cap have is attractive in terms of long-term investment. And the mid-cap volume, the small-cap volumes are much above the peak, signaling some more corrections in the small-cap stocks. However, they continue to like property developers, industry and power companies, and some PSUs as well. There was also a Kotak note on the small and mid-cap correction. They're saying that's too little, not too soon. They're saying that the low-quality stocks, if they correct themselves, it's a long way for the correction to come into picture in terms of fundamentals. And they find majority of mid-caps and small-caps, their valuations are expensive, and they're not sure if the recent correction will change any kind of behavior in terms of institutional investors. However, retail investors have a higher exposure, and hence the exposure will be the retail investors will get more hurt by the recent corrections that have taken place. So this is the overall view of what the brokerages are saying.
Mahima, that last line has been a truism in the markets forever, where retail investors get hurt more. But then, patience becomes key at a time like that. And interesting conversations we had today, Niraj, with we spoke with Siddharth Bhaiya, we spoke with Vijay Kedia, and that was reiterated quite a bit, that patience is key. In this case, we don't even have to wait too long for a rebound. The question is that do you see it, sustaining, and considering that there are 2 or 3 important things happening tomorrow, it's going to be an important day to watch.
Most certainly, and that's why actually at 3:20, Tamanna, good to get some perspective before we get some of the marquee voices back again, but some perspective on BTST or STBT as the case may be from Rajesh, because interestingly, yesterday viewers remember, consensus view was that if there is a bounce, banks will participate. Banks are not participating. So Rajesh, good day of trade as it's ending. What would be a top trading strategy which you can, BTST or STBT?
So Niraj, the one sector where we are seeing, sustained buying action throughout the day, that is IT. And from IT, most of the large cap IT stocks are showing good traction in terms of buying. So HCL Tech, that stock we like at this moment. And we believe that, almost the stock is trading near to its all-time high trajectory. So looking at throughout the day buying action in this sector, we expect that momentum can continue further tomorrow also. So HCL Tech, one can look to buy for BTST with stop loss of 1650, upside target we can see towards 1710 to 1720. The second sector or stock which we like from FMCG, that is Colgate-Palmolive. Stock again managed to give breakout of almost 8-week consolidation range. And the kind of long built-up is there. We believe that Colgate-Palmolive can continue furthermore upside towards 2750, 2760 kind of zone. One can buy this stock with stop loss of 2650. And the third stock is from Pharma space, and that we like Lupin. That stock is also showing good traction, and we believe that Lupin can continue furthermore upside towards 1690 to 1700. Keep stop loss of 1610 to buy Lupin also.
All right. Those are the key picks. Lupin, definitely one of them. Lupin with positive news flow today as well. And I just want to quickly pull up and see what's happening with BEL. BEL has an order worth 1940 crores. 847 crores is from L&T out of that. A bit of a spike there. They're going to be supplying warfare sensors, and there are other defense orders as well for about 1,092 crores. So defense pack, definitely one to look at. But a lot of these are long-term plays, and through the host of conversations we had through the day, we had interesting responses from Vijay Kedia, Siddharth Bhaiya as well, on why patience becomes key.
There are still froth in some, because mid-cap is a large, 5,000 shares are there in mid-cap, small cap and micro-cap and all. So I'm not expecting that this market is going to crash. I am just expecting that an adjustment will happen in this market. There are many stocks which have fallen 30-40% from their peak, but they have also risen 3 times, 4 times, 300%, 400% from their bottom. So there are two ways of look at it. So I feel that maybe in some of the pocket, in some of the stocks, you will find value. Maybe already value is there, or you may find value in this week or coming week. But index, so far index is concerned, I think it will take some time to show a new high. And even those shares which have corrected also will take some time to show new high.
What I see around overall with the IPOs, look, my biggest concern is I focus on what the promoters do. March 2020 and through 2021, you had massive insider buying by the promoters. Massive insider buying. Last 1 year, I barely see any insider purchases. They've been busy offloading their stakes. You have international MNC companies like Whirlpool, like Hyundai, like BAT. They are coming and offloading their stake in the Indian markets. Clearly, those guys understand their business better than what we do. Whirlpool globally quotes at 8-9 times P multiple. In India, it is quoting at 50 P multiple or whatever. Their annual profit, 60,000 people working throughout the year, their annual profit is $500 million. And they just sold 24% stake and made $500 million.
Yeah, but historically, Siddharth, I mean, I'm just saying, for example, a Unilever has always traded at a discount to HUL, yes. Nestle Global to Nestle India. So that is not a new phenomenon, right?
Yes, we've always quoted at a premium, but the premium to a large extent, Niraj, was limited. What we are seeing is a blowout as far as the premiums are concerned. I'll give you examples. We've started researching international companies. Mm-hmm. Like Singtel owns a significant chunk in Bharti Airtel. Singtel's market cap is $39 billion. They own $30 billion worth of Bharti Airtel. Right? We're looking at China Mobile. China Mobile's profitability is 15x of Bharti Airtel's. And their market cap is only 2x of Bharti. So there's an 80% valuation differential. You're talking about an 80% valuation differential, which is phenomenal. So we've always quoted at premium for the quality of companies that we have had in the Nifty. Look, there is Nifty, which is very, very high quality companies. And we also have to remember that you have a lot of unscrupulous companies. We have serious corporate governance issues in smaller companies, which we have had in the past. So we're not, which people tend to kind of forget in this markets. Yeah. So yes, Nifty, as I said, very high quality company. Some of the premium is justified, but not all the premium is justified.
Well, whether that premium is justified or not, the rebound certainly seems to have been justified by the markets. You're heading towards our close with quite a bit of positive flows. Rajesh, any last calls?
I think as you talked about BL and HL, these two stocks are also looking promising. I think one can take this stock as a BTST also. And I think long-term structure for both the stocks are promising. So one can look to buy on a positional basis also. So BL, HL, these two stocks are also can be looked at for BTST point of view.
All right.
Thanks so much for joining in today and giving us your perspective, Mr. Chokalingam, Rajesh. Much appreciate your time. But let's start wrapping up the markets because it's a good day to wrap the markets. Yesterday, people would have been glum, disappointed. I dare say some small cap investors even scared. But today, there's a semblance of sanity. I call it that because it's only 140 points. It's not like a rah-rah move today. But the broader markets and small caps in particular actually are showing that kind of a move, because if you look at the small cap index with 2.7, 2.8% gains, or thereabouts 3% actually now, closing in at the highest point of the day. So really strong setup for Friday, March the 15th. The heat map on the large caps, just to show what's happened there and the kind of gains that the Adani twins have shown today, 6% apiece and 5% apiece. And by the way, the broader end of the spectrum has a clutch of other Adani Group stocks which have done really well. Hindalco up 4%, Hero, ONGC. I mean, the list is solid and strong, and not too many losers. But for the financials, look at that. The top 4 losers are financials, and this is where the market has surprised people, because frankly, all through the day yesterday, people said that, oh, the ones which have shown resilience are banks. The ones which will bounce back the first time that the market bounces back will be banks. Today, what's happened is exactly the reverse. Yes, banks could still do well tomorrow and lead the charge. But for today, banks are not participating in what otherwise is a bounce back move. And, just get the market breath here before Tamanna comes in, just to show you the strength of the market move today. Very strong.
Since you're talking about banks, I just want to quickly see what Yes Bank closed at. It was in the news this morning that they're looking for buyers, 51% stake, which will give an exit to HDFC, to SBI, ICICI, and what a sharp move, smart move for Yes Bank. The heroes of the day, though, Niraj, have been all the losers yesterday. Kal ka zero, aaj ka hero. If you want to give a filmy dialogue, all your rail stocks, your SJVN, RITES, RVNL, you should pull up some of them and see what happened. Look at an RVNL. Let's pull up all the indices and give you a sense of what has really worked today. If I were to look at rebound kind of trade, the PSEs, yesterday they were getting a lot of flack. Bad publicity, too much valuation, very little float. Well, one way or the other, they're back. Energy, metal, all of them doing well. Rail stocks, Adani Group stocks have had a superb day as well. Now, I don't know about sustainability, but the fact is that you've seen resilience in this market and a very, very quick bounce back from lower levels.
Most certainly. Just before we wrap up, if you can pull up the BSE 500 and just that key list of losers and gainers today at the broader end. And as Tamanna said, it's across the screen, because it's not just PSUs. There's a bit of infra, bit of metals, banks, ITI, so a bit of a railway flavor thrown in.
Core economy. Core economy is done well.
What is not done well is Tata Investment yet again, down about 5%. So as brisk as the move was on the upside, it's falling with equal gusto, if you will. Down 5% for the 4th or the 5th day on a trot now.
Yeah. I think those, there was a meme yesterday that to participate in the markets, you need to have your own set of stress tests. Some of that stress has eased today. Let's hope it continues. But for now, from Niraj, me, and the entire team that puts together the show, thank you so much for watching.
Hello and welcome to NDTV Profit. You're watching a special show on state budgets. Now, given the emphasis on the union budget every single time around, even if it happens to be an interim budget or a vote on account, while that's understandable, often the emphasis on state budgets is a lot lesser. State budgets continue to remain extremely significant from all perspectives in terms of fiscal deficits, borrowings, or their capex outlay. So today's show is essentially a special on trying to understand what's happening in terms of state budgets, and for that I'm in conversation with Paras Jasrai from India Ratings and Research. Paras, thank you so very much for taking time out for the special show with us today.
Thanks for Pallavi for having me here.
So, before we can begin, I'd just like to take the viewers through some quick key takeaways from some of the research that you've put together on the state budgets. Now, according to an analysis of state budgets by India Ratings and Research, aggregate fiscal deficit for FY25 has been budgeted at 3% of the GDP. That's a notch lower than 3.4%, which was the figure that's coming in from the revised estimate of the state budgets. This is, of course, the 26 states which have presented full budgets for FY25. Now, even the revenue deficit has been budgeted a tad lower at 0.2% of the GDP, down from about 0.5% of the GDP as per revised estimates for FY24, which essentially indicates an improvement in the quality of spending. Another indicator which helps in gauging the quality of public expenditure, capital outlay as a percentage of total expenditure has been budgeted at about 16% for the year FY25, broadly in line with FY24. So we'll of course be discussing more of this in the show. But Paras, to start with the fiscal deficit, for instance, what is the key takeaway when you look at these state budgets? Of course, even within states, there does seem to be a fair degree of variability. I believe Bihar, for instance, its revised estimate for fiscal deficit is actually at 8.9% of the GDP versus the figure it had budgeted of 3% of the GDP. And for FY25, the state is once again budgeting 3% of the GDP, making us, at least at the forefront, question the significance and the validity of these figures going forward. But what are you broadly making of the states on an aggregate, and any light you'd like to throw on some specific states like Bihar, for instance?
Yes, sure. So, as you mentioned correctly, that the quality of deficit of the states has improved, and the way to gauge that is taking a proportion of revenue deficit as a proportion of the fiscal deficit. And fiscal deficit is basically the amount of total borrowing that the states in aggregate or individual states do. And a lower number on that front indicates that a higher chunk is diverted towards capital expenditure. And in FY25, that ratio stands at about 7.3% in FY25. So that is, and to give a brief context, it was around 25% during the pre-COVID period of FY20. So this shows that there has been a continuation of focus from the policy perspective from the states in terms of like spending more on capex. We witnessed and saw that in FY24, and the same trend has been continued in FY25, which is a very positive development in terms of policy consistency from the states was focusing more on capex. So that is one. Another good point has been that because of the compliance-led measures and the better than expected economic recovery by the states, many states have undertaken various measures, like, for example, Punjab and Kerala have undertaken specific measures by introducing a tax research center unit within their own states. And that has, like for Punjab, for that matter, their own tax revenue growth has been good. And if you look at the overall own revenue growth of the states, so that has been budgeted at a good level. To give a number specifically, it would be around 7.9% of GDP in FY25 for the states, and that is a very positive development. though we have seen that states tend to be a bit more optimistic on their own revenues whenever they present their budgets. The actuals turn out to be quite low, but the broader point has been that compliance-led measures and the way the economic recovery has been, states have been getting higher revenues, and that also has meant that their dependency on the central government in the form of grants and tax devolution has also slightly gone down if you compare with the pre-COVID level. So that's the second trend. And within capex, what we have witnessed specifically for like various states is that there has been an enhanced focus on social services. So social services includes your medical and public health and education services and etc. So to give it in a perspective, around 22% of the overall capex of the states was channeled towards social services in the pre-COVID level. But right now, what we have witnessed post FY21, specifically from FY23 onwards, that ratio has gone up to around 32% on an average, and that the continuation is there even in FY25 as well. So that indicates that the state's focus on overall human development, which is a very important factor for various states. I can give some of the examples of different states as we move further in our discussion. So that's some briefly speaking of the overall perspective from the budgets. Now, just coming on the numbers for Bihar. Bihar tends to have a very high the numbers toward what we also have put out in a separate report in a detailed manner for Bihar was that Bihar tends to have a very significant difference from in terms of what it puts out in actual and what it is there in the budget estimates and even in the revised estimates. So to give it a number, I think in FY23 on revised estimate also the overall the fiscal deficit was around 11%, and if you see in FY24, as you pointed out, it was around 8%. But the actuals turn out to be much lower, and the reason for that is that Bihar tends to get a very larger chunk, about 70% of its revenues from the central government, and within that, a very larger share is that of grants. And what we have witnessed from the state is that they tend to put out a higher number for the grants in terms of the budget, but they are not able to get that amount in the actuals. And partly, part of the reason is also that states tend to be the state of Bihar has administrative capacity in terms of spending that amount of money as well. And because of that, the overall revenue expenditure also goes down than what they put out in the budget. And that's why their overall numbers do look very different when you look at the actuals 2 years.
Hello and welcome back. You're watching NDTV Profit and you're watching a States Finances special. Here with us today, I'm joined by Paras Jasrai from India Ratings, who's taking us through what he's been making of the state budgets and whether or not there has been an improvement in the quality of state spending and fiscal discipline. Paras, once again, thank you so much for taking time out for us today. So earlier on in the conversation, you spoke about how there has been an uptick in welfare spending among